All right, so let's get started, everyone. Welcome to another session, and I think, in my opinion, one of the most important session of this entire bootcamp of swing trading brought to you by EdiGlobe. This session is all about psychology. It's all about risk management. It's all about stop loss. It is all about becoming a professional trader. Okay, and as I said, in my opinion, this is not one of this is the most important session, which is going to make you a profitable trader. Even if you have the best strategy, because you guys are so much interested in strategy, I even have a bonus strategy for you guys at the end of the session, and that's a bonus for you guys. But even if you learn the best strategy in the world, you cannot be profitable if you don't manage your risk properly. And what I'm going to teach you today, it is a summary. Okay, it is like the summary of the entire life's work of a very, very popular and very, very great trader, and his name is Dr. Van Tharp. Okay, he's like one of the greatest, one of those people whom I've admired a lot, and he passed away, I think, a year and a half ago. And but whatever he has learned in his lifetime, he has summarized that in his book. Okay, and what I'm going to teach you today, it is like no, whatever he has learned in his lifetime, it's all about risk management, it's all about money management. And inspired by that book, I have created this particular session for you guys. All right, so this is something super, super powerful. Do not miss this. Do not watch this on 2x. Do not watch this on 1.5 or 1.75x. This is something super, super important. Okay, and also I say this all the time when I start the session, that is, whatever I've taught you so far, we have talked about basics, we talked about price, pattern, volume, momentum, volatility, whatnot. We talked about strategies, we have discussed a lot of strategies, we saw so many examples, we talked about practice, we talked about so many things, and that is enough to make you a trader. Okay, but what I'm going to teach you today is going to make you a super trader. Okay, whatever you've done so far is enough to make you a trader. What I'm going to teach you today is going to make you a super trader. And when I talk about super trader, I don't mean SUPER trader. What I mean is SPR. Okay, SPR trader. Now, what's the meaning of that? SPR stands for S stands for stop loss, P stands for position sizing, and R stands for risk management. S, stop loss, P, position sizing, R, risk management. And even if you have the best strategy in the world, and if you don't have these three things intact in your trading systems, you can never, I can just write this on a stamp paper, even if you trade Forex or options or futures or commodities or crypto, doesn't matter what you trade, you cannot be profitable in the long term. For sure. So what are these things? Let's talk about them one by one. The first is stop loss. And the simple meaning of stop loss is stop your loss. Okay, stop your loss. That's all. Okay, what do I mean by that? Let's say, I'll give you a simple example. Let's say you bought a breakout. Now, you guys know how to buy a breakout. Once the breakout happens with strong volume, you buy above the high of breakout candle and the low is your stop loss. What is the meaning of the stop loss? Let's say you bought at 100 rupees and the low is 95 rupees. Okay. So if the market proves you right and the market starts going up, that's great. Okay, you are making money. But if the market starts going down, where will you stop? That's the question. Where will you stop your loss? That's the question. See, I always say this, that in trading, how much money you will make is not in your hands. It's in the hands of market. Okay, 100 rupees stock can go to 110, can go to 120, it can go to 130, 50, 200, 500, 10,000. It can go to any upward level. But if it is about to go down, how much can the value reduce? It can go down to zero. And you don't want that to happen to your portfolio, right? So what will you do? At a certain point, you will accept that you were wrong in the market, or you will accept that, okay, market has proved me wrong and this is the time to exit. After taking certain, because of course, if you are wrong, it will cost you something. So you will pay that cost, which is fixed by you, You are deciding how much you will lose, and then you are exiting from the market. So how much profit you will make is in the hands of the market. How much loss you will make is always and should always be in your hands. And in this case, how much loss will I make? Even if the market proves me very, very wrong, I will only lose these 5 rupees. I will not wait if the market goes till 90 or 80 or 85 कि नहीं यहाँ से ऊपर चला जाएगा यहाँ से ऊपर चला I won't wait for that. The moment the stock touches 95, I will exit this position right away. I will accept I was wrong. I will take 5 rupees of loss. That's it. This is called stop loss. There are multiple types of stop losses. I'm going to talk about all of them today. Let's talk about them one by one. The first is what I just gave an example of, that is price stop loss. Price stop loss means 100 rupees का buy है, okay, 95 SL है, so 5 rupees is your price stop loss. Simple, nothing complicated. And everybody knows the stop loss, most of them. Okay. Second type of stop loss is something called as reason stop loss. Okay, reason SL. What is the meaning of that? See, if you are entering into the market or entering into a position in the market, you must have a reason. There are so many people who ask me कि सर मैंने स्टॉक बाय किया है, क्या करूं? आई एम लाइक क्यों बाय किया है? तो लाइक सर अच्छा लगा इसलिए। मैंने कहा तो ठीक है, जैसा आप लग रहा है वैसा कर लो। If you are entering into the market, if you are entering into a position, if you're making a position in the market, there has to be a reason behind it. Otherwise, why would you enter? If there is no reason, why are you entering in the first place? The reason can be anything. It can be a breakout, it can be a support, it can be a resistance if you are short selling, it can be a breakdown, it can be a crossover of RSI, right? Like this, it can be a moving average crossover like this, 9 going above 20, 20 going above 50, anything like that. You must have a reason. It can be indicator based, it can be price action based, it can be anything. And if that reason is there with you, you know where to exit. Why? Because the moment the reason is over, your position will also be over. What do I mean by that? Let's say I'm trading on RSI crossover. Okay, that's great. When the RSI gives me a crossover, I'll just erase everything else. Okay, let's say this is the RSI 60/40. There's a crossover. Okay, your price is also going up. This is your alert candle. Now you guys know buy above the high of alert candle. Okay, so you are going to buy, and the moment it goes up, your RSI will also start going up. So it is going up, 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 up. Your stop loss is this. Fine. Then you trail your stop loss, it might be here. Then you trail your stop loss, it might be here. Then at one day, when the RSI was also about 60, market went down to this level. Your stop loss currently is this. Market went down to this level. And that took the RSI below 60. Don't you think the entire reason of your entry, which was RSI 60 crossover, is now over? The moment that reason is over, doesn't matter if your price stop loss is triggered or not, you will exit the position immediately. That is called reason stop loss. It can be something like breakout. So what is the reason of why do we buy above the high? Why do we sell below the low of the breakout candle? Because our reason of entry is breakout. Okay, once the breakout is it's going up, it's successful, that's great. But if there is a candle going below the low of breakout candle, that means the breakout was a false breakout. It's a false breakout. That's why I'm exiting. My entire reason of entry is now over. That's why your reason, even if your price stop loss is somewhere else, maybe it can be here, maybe you don't want to take much, you want, like, you have a bigger risk appetite, so you have put your price stop loss somewhere here. Even if the low of the breakout candle is done, you will exit because the reason of entry is over. That's all. So reason khatam, trade khatam. Okay. Third type of stop loss is something which not a lot of people know, and that is called, I'll tell you. Where's the pen? Yes. Time stop loss. What is this time stop loss? Time stop loss, a lot of people don't know this. Okay. Let's say you trade a breakup, or I say crossover, whatever you trade, doesn't matter. You buy about the high, sell below the low. This is your target because it's a previous resistance, previous peak, and it's a major resistance. Trade was activated. It was a swing trade, so you were supposed to hold it for a period of maximum 1 month, not more than that. What happened is it went up, great. Then it came a little bit down, and now it's here somewhere. It is neither giving you the stop loss nor giving you the target. It's been 1 month, it's been 1.5 months, it's been 2 months. You are just, your money is deployed there and you're just holding your hands and waiting for the target. Will you do that? No. Returns are not just quantitative, they are quantitative with respect to time, right? This money, if you use it somewhere where the momentum is strong, it will get you much better returns rather than holding a stock which is not giving you any returns. A money which is not making any returns, it's like the money getting wasted. So what will you do? You might hold it for a period up to 1 month, but the moment 1 month is over, wherever the stock is, let's say it was here, it was profitable, that's great. Even if it was here, giving you a little bit of loss, that's okay. You will exit that position even if your price stop loss or target is not achieved. Why? Because your time stop loss is triggered and you will deploy this money somewhere else where this can get you much better and faster returns. I have seen some people who bought a stock for intraday trading and now they are holding it since 2, 3 years. Why? Because when they were buying it, the price went down and they were like, I can hold it for a couple of days, it will go up, then I will sell it. Then they were like, I'm a medium term investor. Let's see what will happen. Market will correct itself. Then they start saying, no, this has gone too much down. There's no point of selling it. The company quality is good, it will come up again and I will sell it with profit. And now I'm a long term investor. Are you bought it for intraday? If you would have accepted your defeat from the market and you would have exited this stock, you would have lost only 5-10 rupees. Now your entire portfolio is at stake. That's why putting time stop loss is something very crucial for every trader. Okay, if you're trading, assign a time to your trade. Okay, it's an intraday trade. Okay, the moment if it's giving you loss, profit doesn't matter, you exit before the end of the day. If it's a swing trade, exit before the end of the month. If it's a positional trade, exit before 6 months. If it's a long-term investment, then hold it. But your view should be clear before taking a trade, not after taking the trade. Okay, and the last and my favorite type of stop loss is something called as trailing stop loss. Now, I might have taught this in your training period, your strategy part, that, let's say you traded this crossover or breakout. Okay. This 100 was your buying price. 95 is your stop loss. The moment price starts giving you almost equal returns, okay, your stop this 95 is your initial stop loss. That's great. The moment the market goes up by 5 points, your target might be 110. That doesn't matter. Okay. The moment the price goes up to 5 points, you will shift your stop loss cost to cost. Okay. Now what we do is, once the price starts moving in your desired direction, okay, you have a target, you might be having resistance, you might be having your own views, risk reward, anything is possible. We don't book our entire quantity there. Why? Because the thing is, you don't know how much it can give you. You're just assuming it will give me this much at least. That's where I'll put some of my quantity out of risk. That's what you're assuming. That's why you're booking your profits, right? But you don't know how much the potential of the stock is. Nobody knows in reality. Sorry for the bad hair I have today. But yeah, right? Nobody knows the potential, how much it can rise up, right? And the thing is, what happens is there are only 5 things possible in stock market. Only 5 things possible in stock. What are those 5 things? First, big profit. Second, small profit. Third, break even. It means no profit, no loss. Fourth, small loss. Fifth, big loss. Big profit, small profit, break even, small loss, big loss. These are the only five possibilities in stock market. Nothing beyond these can happen. Now, what you have to do is you just have to eradicate this big loss from the equation. If you eradicate this big loss from the equation, what will happen is your small profit will be taken away by small loss. Okay. Then break even doesn't matter because it's no profit, no loss. All what you're left with is big profit. And this is exactly what we want. But how can we make big profit if we are just fixing our small targets? We are not letting market to give us the entire potential trend. And how can we gain the entire potential trend? By trailing our stop loss, by not booking the profit at 110, but waiting for a much bigger target. How will we do that? We will just keep on shifting our stop loss. This was a loss making stop loss. Okay. But the moment you take your position at 100, that means a break even stop loss. Then let's say you went to 110, the price went to 110. You book 50% of your quantity. Okay. And then you trail your price stop loss to 105. So even if the market goes down now, the rest 50% quantity will be booked at 105. So if 50% was booked at 110, rest was 105. But if this does not happen, if it goes to 115, you will trail your stop loss to 110, 5% up, 5 points up. So now if the price goes down, you will book the entire quantity at 110. Then if it starts going even more higher to 120, you will take your stop loss 115. That's a great situation. You sold half of the quantity at 110 and now you are ready to sell the rest half at an even higher price. Then you keep on holding it. The market goes to 125, your stop loss will be 120. If it goes to 130, your stop loss will be 125. If the market goes to 140, your stop loss will be 135. That's how you will just keep on increasing your stop loss. That's called trailing stop loss. And there are multiple methods. What I showed you is something called as point by point method. Sorry, point by point. There is one more way that is called candle by candle. I think that I explained you in a strategy also. Okay. And then there is another way, which is called using trend follower. I'm going to teach you how. Okay, how does this trend follower thing heads? That's going to be taught in today's bonus strategy part. So these are the few ways by which you can train your stop loss. Now, which one to use? That's up to you, and some experience will tell you what to use. In the strategies, what to use, I've already told you. I'm going to also teach you a bonus strategy. In that, what you can use, I'm going to tell that to you as well. Okay, and that's how you can gain the maximum return and the maximum of a particular trend in the market, which can help you to make this big profit, which is the only thing that will sustain in your trading account. These small losses will be small profit will take away your small losses. It's not going to help you in any way. So these are the four types of stop loss you must know about. All right. Now let's move on to another point that is called position sizing. Okay, let's talk about it. What is position sizing? Position sizing means what will be the size of your position, or from how much money you will buy that stock, or what will be the capital deployed in a particular trade. That's position sizing. Let's say your stop loss was, your buying price was 100 rupees and stop loss was 95. Now, how much do you have at risk per share? Per share, you will only lose 5. So if you buy one share, you will lose 5 rupees. If you buy 10 shares, you will lose 50 rupees. If you buy 1,000 share, you will lose 5,000 rupees. If you buy 1 lakh share, you will lose 5 lakh rupees. If you buy 1 crore share, you can lose 5 crore rupees, even if your stop loss is intact. So just by increasing the position size, even if your stop loss is intact, the amount you will lose is increasing. But if a position size is intact, your loss will always be in your hand. What do I mean by that? And how to decide a position size? There are two ways to decide position size. The first one is risk based. Another one is this. I'm not writing the entire spelling. It's too much of work for me. But and at the end of the day, that too. But yeah, confidence based. Okay. These two factors will decide how much you will put or how much money you will deploy in one single trade. Okay. Let's talk about these two one by one. First is risk based position sizing. How will you decide that? See, thing is, in the next part, we will understand this. You will have to decide how much risk you will take in one trade. So let's say I want to lose, I'm ready to lose only 1000 rupees in one trade. If one trade goes wrong, I'm only ready to lose 1000 rupees, not more than that. So the simple formula of risk based position sizing is RPT upon RPS. That means risk per trade upon risk per share. What do I mean by that? Risk per trade upon risk per share. What is the risk per trade I'm ready to take? I'm ready to take only 1000 rupees of risk per trade. And when I was buying this stock at a breakout, and breakout price was 100 rupees and stop loss was 95. What is the risk per share? How much money I'm going to lose? 5 rupees. So 5 rupees the bottom risk per share. What is the answer? The answer is 200. So if I want to buy this share, whatever strategy I'm using doesn't matter. If I want to buy this share and my stop loss is 95, I will only buy, doesn't matter how much capital I have, I will only buy 200 quantities of this share. Only 200 quantities. So even if I'm wrong, if the price goes up, that's great. But even if I'm proved wrong by the market and market says, no, the price is going down, and if my stop loss is triggered, how much will I lose? I will lose 5 rupees per share. I have bought 200 shares. I will only lose what I have decided, and that is 1000 quantity. That's it. 1000 rupees, that's it. On the other hand, let's say the risk 100 rupees was the buying price and the stop loss was only 98. That's great. Perfect. So what is the risk per share here? It's just 2. So according to the formula, RPT upon RPS, 1000 divided by 2, what will be the quantity that I can buy? The quantity I can buy is 500. So now, instead of 200 rupees, I can buy 5, instead of 200 quantities, I can buy 500 quantities. And even if I'm proved wrong by the market goes down after this, I will only lose 1000 rupees that was decided by me, not by the market. Or let's say there was another trade that you took and the stop loss, the buying price was 100 rupees and stop loss was 90. That means risk per share upon risk per trade upon risk per share, 1000 upon 10. How much you can actually buy? You can only buy 100 quantities. Doesn't matter how much money you have. Even if you have 1 crore rupees, you are only allowed to trade with 100 quantities. There are some people I've seen, and many people I've seen, they trade on the basis of their capital. That, okay, I want to deploy 1 lakh rupee in this trade. Why do you want to deploy 1 lakh rupees? Who told you to do that? That is called capital based position sizing, and that is absolute capital killer. You should never do capital. They're like, okay, I want to invest in 10 stocks. I have 10 lakh rupees. I will deploy 1 lakh rupees in it. No, don't do that. You have a reason of entry. You have a stop loss. Initial stop loss, I'm talking about initial stop loss, not a trailing stop loss. That's in profit. You have your reason of entry. You have your initial stop loss. Calculate how much you can buy. Okay. There will be some stocks whose stop loss is very small. So you can buy a quantity which is even more higher than 1 lakh rupees. There will be some stocks in which the stop loss is very big. So the system will, or the calculation will tell you to buy this stock only worth rupees 20,000, 50,000. So we are not considering our capital before taking a trade. We are considering our risk before taking the trade, which is the most important part. That's called risk-based position sizing. And the second position sizing is, just give me a second, confidence-based position sizing. What is the meaning of that? Do you know about trade confidence? We talked about this, right? We talked about this. The more confidence I have in a trade, more quantity I will buy. More the confidence I have in a trade, like larger the quantity I will buy. So, for example, there is a trade which is giving me all the confirmations like price, pattern, volume, momentum, volatility, time sentiment, trend, everything is in my favor. It's a high probability trade. It's like an ideal situation. I have great confidence in the trade. What will I do? I will go all in. I will go with my full quantity. When I talk about full quantity, I'm talking about the quantity that I'm getting based on my risk. I in not even like, even if Rakesh Jhunjhunwala comes from the heaven, and or maybe wherever he is, he comes down and asks you to buy the share of a company. You will not buy beyond your risk appetite. You will not buy beyond your risk based position sizing. But if you have full confidence, let's say risk based position sizing saying you can buy 300 quantities based on risk. If you have full confidence, you will buy 300 quantities full. But let's say this trade is, everything is good, but the volume of the breakout is not that much. Or everything is good, but momentum is not giving me confirmation. Everything is good, but volatility is okay, okay. If that is the case, then what's happening is you don't have full confidence in the trade. So even if the quantity based on risk is 300, you can go with maybe 200 quantity, maybe 100, maybe 150, maybe 250. If you are not very confident in the trade, you don't no need to go full fledged. You can go a little bit down. Even let's say price, pattern, volume, everything is great, but the trend of the market is down, or market sentiments are weak, or a news is about to come, or a election results are about to come, then there is some risk involved. There's huge volatility in the market. There's some uncertainty in the market. There can be some fear in the market. That's why that is that impacting your confidence. And if that is the case, you will not go with your full quantity. You will go with some lesser quantity. That's called confidence-based position sizing. Okay. Now, if that part is clear, let's talk about another major part, that is risk management. What is risk management? Risk simply means, when you talk about risk in the stock market, risk simply means loss. Okay. Risk in stock market is equals to loss. Okay. Risk management means loss management. Risk management means loss management. What is the meaning of that? See, as I said, your loss should be always in your hand. If you don't manage it, you will lose the control and market will take away the entire camp. And stock market is not a T20 match. It's not IPL. It is a one day international, or it's a test match. Yeah, so test match. I'm not a cricket fan, so I'm not sure about the terms I'm using are right or not. But yeah, I hope I'm right. It's a test match. When you play in IPL, you play for the score, you play for sixes and fours. But when you play for a test match, you save your wicket, right? You have to save your wicket because you have to, continue this inning for at least 2.5 days, if I'm not wrong. You have to save your wicket. That's how you play. You play defensive. Correct? And stock market is that game. You have to play defensive. And for that, risk management is important. And what is the first step of risk management? The first step of risk management is setting your AC to the right temperature, and then giving you the first step, that is called define the risk. Defining the risk is the first step towards risk management. Defining the step risk is the first step of risk management. When you enter into market, the first question I ask, there are so many people who come to me, you can please manage our account. I will give you, 50 lakhs, 10, 1 crore or 2 crores. Please manage our account. Please trade on behalf of us. The first question I ask them is how much risk you are ready to take. Because if you are not ready for that, if you don't have that defined, I will not take your account. Define the risk. Okay. How to define the risk? You can't be like, मैं 1 crore है, मैं उड़ा, no, you can't do that. Okay. How you decide it? You will bifurcate this. How? Firstly, monthly basis पे, weekly basis पे, and daily basis पे, and per day basis. So let's say I have a capital of 10 lakh rupees. So 10 lakh, ठीक है, decent capital. I am ready to lose, let's say, 20% of this capital in a month. That means I am ready to take a loss of 2 lakh rupees. Because of course you're investing in stock market, you're putting your money into stock market, you should be ready for some risk. If you want to make 2 lakh, 3 lakh rupees in a month, you need to take risk of 2, 3 lakh rupees in a month, of course. There are some people I've heard, मुझे रिस्क तो नहीं लेना बट महीने का 10 लाख कमा के दे दो या 5 लाख कमा के दे दो. It's like, ठीक है, आप कहीं और चले जाइए. If you want to make money, you have like there's the saying called, you have to bet to win. You have to what's the saying? You have to bet big to win big, right? So the more risk you take, more returns you can make. Wow, that's another. I can just write this in quote unquote. That's great. Anyways, so let's decide. I have decided I have 10 lakh rupees of capital. From that 10 lakh rupees of capital, I am ready to take 2 lakh rupees of risk in 1 month. That means I don't want to take any more risk more than 2 lakh rupees. Okay. Secondly, if like I'm losing 2 lakh rupees a month, that what does that mean? That simply means that, okay, I'm ready to lose. There are 4 weeks on average, 4 to 5 weeks. So I'm ready to lose, let's say, 50,000 rupees a week. That's my weekly risk. If I'm losing 50,000 rupees a week, that means there are 5 working days in a week. So I'm ready to take 10,000 rupees of loss in a day. And let's say in a day, if I'm taking on average 10 trades, or on average, I'm taking 5 trades in 1 day, that means I'm ready to lose 10,000 in a day. I'm taking 5 trades in a day. That means I'm ready to lose 2,000 rupees in one single trade. Okay. Easy, simple math. Now, if the market wants to take away my entire capital, if the market wants to take away my entire capital, what the market will have to do is every trade that I take. So let's say I'm taking 1 trade, 5 trades a day. And let's say I'm losing 10,000 rupees on that day. Okay. What will happen? I'll tell you what will happen. Sorry, I just forgot the flow. So now, okay, this risk per trade is decided. And I will use this risk per trade where? Over here, which will ultimately decide my risk based position sizing. And if my position sizing is intact with risk per trade, you know what will happen? Your account will never go empty. Why? Let's say I'm taking Let's say I'm taking 5 trades a day. Okay. And weekly I'm taking 25 trades. Monthly I am taking how much? 4 to 5, that means 100 trades. If the market decides कि मुझे इसका पैसा उड़ाना है, and they prove me wrong in each and every trade that I take for the entire month. I've taken 100 trades in a month. If the market proves me wrong in each and every trade that I've taken in a month, 100 trades that I've taken in a month, market can only make me lose 2 lakh rupees, which is just 20% of my cap. And if the market wants me to lose my entire capital for the next 5 months, market cannot afford to give me even one right trade. Even if the market gives me one right trade, I will be able to sustain for even longer. But for the next 5 months, each and every trade that I take has gone wrong every single time, every single day. Only then I will be able to lose my capital. And that is, I think, next to impossible if you have learned the market. Even if you don't know the market, you just put money into 100 stocks, at least 10, 20 of them will go up. Are you getting it? And if you are really doing the hard work, if you have learned the strategies that we have discussed, what is the success rate? Success rate is 6 times, 60%, 65%, 70%. How will your account be blown up? Tell me. Now, when you're doing the swing trading, you don't have to do the daily trade because you don't take trade daily actually. So you can just decide, okay, in a week, I am ready to lose 50,000 rupees, for example. And in a week, I take, let's say, 10 trades. So what will be my risk per trade? 5,000 rupees. So what will be your quantity that you will trade? Risk per trade is 5,000 rupees. Whatever is your risk, let's say 50 rupees is your risk per share. Okay. So your quantity will be, you can buy 100 quantity of this stock. That's it. So even the stock goes wrong, you will only lose 5,000 rupees, which is like a happy loss. That is the loss that you're ready to take. Because आपने एंटर किया है, रिस्क लेना ही है. Now I'm going to tell you what's going to happen in the real life after after doing this entire thing. What will happen in the real life? You will take 10 trades in a week. At least 10 trades you will take in a week. Out of those 10 trades, at least two, at least I'm saying at least two out of the 10, let's say 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. At least these two will give you clear cut stop loss. Guaranteed. Then these two will give you break even. Okay, I'm not saying these are the stocks that you know. You might see 15 stock, 20 stocks a week. Out of those 15, 20, you will take almost 10 trades because some of them might not be activated that week. Break even. And then you'll be left with these 6 stocks. Okay, out of these 6 stocks, these two will give you your first target. That's where you will put 50% of your quantity, and that will make you small profit or decent size of profit. These two will give you first target and then a little bit up and down movement, which will give you decent amount of target. And at least one or two of them will give you big. So overall, what you've lost over here will be compensated by these things, maybe these things. What you've lost over here will be compensated by these two. What you'll be left with is the profit that you've made in these 3 stocks. Okay, that's how in real life it's going to go. And at the end of the week, at the end of the month, and the end of the year, after all the losses, all the profits, you will be a profitable trader, provided you follow all the things properly. Second thing that you do in risk management is choosing the right trades. Choosing the right trades. What do I mean by that? Once that part is done, you have decided all the trades and all, then you will choose the right trade. What do I mean by that? There is something called as risk reward ratio. Okay. R, R, R. The film that won the Oscar, I think. Yeah, they won the Oscar or something. I don't know. Risk reward ratio. That means how much risk you are taking for what amount of reward. Okay. So you have to do this one thing. You have to backtest all the strategies that we have learned at least for 5 years. Backtest. That means go back 5 years and see how much money these strategies have made. Some of them might be easy to backtest, some of them might be a little bit difficult for backtesting. And because you guys are students only, so you guys have time that okay, the moment you start earning and then you start investing in stock market, you have a decent amount of time to practice them in the real market, maybe with paper trading, maybe with just observing the market. You can check what is the accuracy of these strategies. People claim that they have 90% accurate strategy, 95% accurate strategy, 99% accurate strategy. I don't know how they achieved that benchmark. All of them are fake. Strategies can be 60, 75% accurate at max. At max. 70%, if you get it, that's a holy grail strategy and people will bow down to you. And all other people who are claiming 70, 75, 80 to mil jata, 85 pe mil jata, they are all just bluffing. Clearly bluffing. One of the best traders in the world, उनके पास भी 85 तक की स्ट्रैटेजी नहीं थी, वो भी रिस्क मैनेजमेंट करके ट्रेड करते थे. तो बाकी ये जो तुच्चे जो यूट्यूबर्स या इन्फ्लुएंसर्स हैं वो तो दूर रहो. ओके. एनीवेज, एंड जो भी बता भी रहा है कि आई हैव द स्ट्रैटेजी बाय दिस कोर्स एंड बाय दैट, डोंट फॉल फॉर दैट, डू नॉट फॉल फॉर दैट. एनीवे, आई वाज सेइंग, they will show you their luxurious lifestyles. They will show you their suits. I've seen some people, they're wearing suits and trading. I'll tell you one thing. The reason I became a trader is because I don't want to wear a suit. I want to work from the comfort of my home. I want to work, I want to work. I want the time freedom. I want that, financial freedom. I can travel the world. I can wear my shorts and, work and make money. I don't want to wear those uncomfortable ties. I don't want to, work in those corporate offices. I don't want to do that. Right now, I am here in an office of my family. Right, my office is a studio, is a small studio where I make videos, and then there are 3 4 people who come and trade along with me and help me in the trading. That's like a small office that we have, and it's more like a fun zone where we actually work. We don't want corporate meetings and all that stuff. There are 4 traders, there are some editors, then there's some behind the scene team, and then there are some people to take care of. That's our entire office where I do this trading stuff. We don't have any fancy corporate buildings. We don't want to wear, and most of the time everybody's in pajamas and t-shirts most of the time. Okay, they trade with 6, 7, 9, 10 screens. Why do you need those screens? I have been trading professionally since 6 years now. I have been managing accounts of a few people now. Okay, I have a team who is trading for me nowadays. We use maximum 2 screens. Like this one screen where there is some chart which is going on. There's another screen where I'm actually working at, and maximum I can have another phone with me where I'm checking my positions and all. That's all. You can't focus on screens more than that. Where I'm trading options and futures, and I'm now also trading, looking at the news. Okay, and I'm also sometimes watching some YouTube videos because there's nothing to do because the market is sideways. Even if after doing all that stuff at the same time, we don't need more than 2 screens. Why do you want to show that off that okay, you need 6 and 9 and 10 screens or 3 screens or 4? Don't need that. Though that big, OLED or curved display. Don't need that. Anyway, that's very off the track. But sometimes when I start speaking out of my heart, then that's, these things happen. Anyways, and this will help you only to, identify, okay, what all things are fake and what's not. Right now, I'm wearing a shirt. It's very uncomfortable for me. I'm just going to change because I had some meetings. So I'm wearing this thing. I'm going to change into a t-shirt. Most of the time when I have some meetings, I am wearing a shirt which is there in my office. And I have like pajamas below that because the meeting is online. That's all. Right. That's anyway. So what I wanted to say is, let's say of even the accuracy of your strategy is 50%. It means if you're taking 100 trades, 50 of them will go wrong and 50 of them will go right. Okay. With 50% accurate strategy, if you maintain a risk reward ratio of 1:1, that means if you're taking a trade, okay, you will lose 5 rupees and your target will be 5 rupees only. So either you will lose 5 rupees or you will make 5 rupees. That's called 1:1 risk reward. That means your 5 rupees was at stake and 5 rupees for 5 rupees of profit. That's 1:1 risk reward ratio. Even if you achieve that much, you can end up at break even. Why? Because you took 100 trades, 50 of them were wrong. So let's say you lost 1 rupees in those trades, and 50 of them were right. So you made 1 rupees in those trades. If you made 50 rupees, you lost 50 rupees. Done. The moment you go beyond 50% accuracy, you will start making money. Let's say let's 60 trades were right and 40 were wrong. So 40, when the 40 were wrong, you lost 40 rupees. When 60 were right, you made 60 rupees. So 60 minus 40, you made 20 rupees of. Or what you can do is you can increase your risk reward ratios. Let's say if you go to 1:2 and your risk accuracy of the strategy is still 50%. So when you will lose, so now your target is not, let's say it was 95 rupees and it was 100 rupees, and your target was 100 and 5 previously, but now you aim for 110. That makes your risk reward 100 and, 1:2. Why? Because you are ready to lose 5 rupees in order to make 10 rupees. So if you're ready to lose 5 rupees to make 10 rupees, your risk reward is 1:2. The moment your risk reward is 1:2 and your accuracy is 50%, what will happen? What will happen? You will lose 50 rupees when you will be wrong 50% of the time, and you will make 100 rupees when you will be right 50% of the time, because you're making 2 rupees per winning trade. So 100 rupees profit, 50 rupees loss. Eventually, you will make 50 rupees of profit, provided you follow proper risk reward, proper position sizing, which is very, very important. And all our strategies, they have either asked you to maintain a risk reward of 1:5, 1:1.5, or a risk reward of 1:2. And all the strategies are more than 50% accurate. So the profit that you will make is, if you stick to this proper management, if you maintain the proper position sizing and proper stop loss, you will make money. This is as simple as that. This is simple math. What is money? Money is math. Master the math, master the money. Correct? This is how you will make profit. I'm showing you the proof. I'm showing you the math. So now the next point that you need to know, now SPR point is complete. Now let's talk about the psychology. What is this psychology? And let me tell you, in trading, in trading, strategies and skill is 20% and psychology is 80%. Strategy and skill is 20% and psychology is 80%. Okay, you don't become a trader on a laptop or on a computer or on paper. You become a trader here first, then you can convert that psychology to money. Okay, what do I mean by that? See, even if I give you the best strategies in the world, if your psychology is not intact, you will not be able to press that buy button. You will not be able to stick to a strategy after getting losses. You will not be able to be consistent in the market, and consistency is the key. What will happen is, let's say you took the first trade, you failed. You took your you triggered the stop loss. You took the second trade, you failed. You got the stop loss. You took the third trade, you failed. The moment you lose the third time, you will change the strategy. You will change the teacher. You will change the system. You will change the setup. You will change the learning process. But the reality is, those three were the losing trades, and the 70% accurate strategy is going to make you the money in the next 7 trades. The moment you decided to quit a strategy, that's the moment you decided to quit a trader in you, or kill a trader in you. So how to maintain this psychology perfectly? Trader psychology is, firstly, you work for loss. There's a saying, expect the worst and nothing in the world will surprise you. Okay, nothing in the world will surprise you. So what is working for loss means? You want to become profitable, you want to make money. But when you are sitting on a trading platform, you should have this thing in mind, that I want to lose money today. This is my target. I want to lose this much. What is this amount? The amount that you decided. The amount that you decided. One more thing I forgot to tell you. Uh, when we're talking about risk management and defining the risk, and talking about monthly risk and weekly risk, the moment that risk is done, let's say I want to take 50,000 rupees of risk in a week. So let's say there was a freak trade happened, or a market opened gap up or gap down. Because of that, I was looking at 50,000 rupees of loss in my PNL. The moment that 50,000 rupees of loss I can see in my PNL, I will exit all my positions in the market, and I will not trade for the entire week. Okay. Why? Because my target for the loss is done. Right. Similarly, work for loss means you will only work for loss. If you're putting a trade, if you're placing an order, if you're placing a stop loss order, if you're placing a trailing stop loss order, your psychology should be, I am working for a loss. If you are working for a loss, if the market gives you the loss, that's great. Your work is done. You exit. That's all. If the market gives you profit, that's fine. And when I'm talking about the loss, that is the pre-decided loss that I actually decided I'm ready to lose in a day, in a trade, and whatever. And that is like a happy loss. So the moment market says you're done for the day, I'm done for the day, I'll just shut down my system, I'll shut down my laptop, I'll go out and have some fun, because my target for the day is done. Second is, focus on the process, not on the profit. I can't emphasize on this anymore. You have to focus on the process, not on the profit. The moment you start looking at your profit, all your psychology starts disrupting. अरे शुड आई बुक इट, अरे 10,000 रुपए बन रहे, अरे 50,000 रुपए बन रहे, बुक कर लो, बुक कर नहीं. Focus on the process. Sometimes the system will show you कि you are making 50,000 rupees, but because you were following a process, you did not book the profit 50,000 rupees. Your stop loss was somewhere here. So market came down and you booked your profit at 40,000 rupees, and you were like, अरे यार काश 50,000 book कर लेता, 10,000 something. नहीं, you don't know कि 50,000 एक सबसे बेस्ट था, या 1 लाख हो सकता था, या 5 लाख हो सकता था. But your system knows, and it has the potential to give you that 1 lakh, 2 lakh, 5 lakhs also, when the time will come, when the time is right, when the trend is right. All what you have to do is to trust the system and follow the process. ऐसा भी होगा, when you bought at 100 rupees, your stop loss was 95 rupees, and your target was 107 rupees. Okay, and you were making good progress. It went up to 106, and everything was like buy sell कर देता हूँ, आ गया, almost target आ गया, almost target आ गया. But you stick to the process, and they say it went up by 5 points, you trail your stop loss from 95 to 100 rupees. Great. And then what happened? From 106, market turned, and you exited at cost to cost. So even though you were looking at 6% profit, and you exited at 0% profit, even that is going to happen. Even that is going to happen. It will happen. I'm going to tell you, it will happen. But even though that happens, you have to focus on the process, because this is the same process which is not just going to give 6%, but 60% profit in the upcoming trends. If you, the moment you stop following the process, you will just stick to the small profit, small loss, small profit, small loss chain. That's all. So focus on the process, not on the profit. Third thing is ego and revenge trading is capital killer. Ego and revenge trading is capital killer. Ego means you are sticking with your view. See, market is very dynamic. You have to change your view according to the market. Okay, you have to change your view according to the market. Market says I'm trendy, you will take trendy trades. Market says I'm sideways, you will take support resistance trade. Market says I'm taking a breakout, you will change your support resistance trade to breakout trades. But if you're like, Nini, I think market is bullish, and you will keep on taking bullish trades, and market is going down, 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 it will kill your cap. That's called ego trading. Second is revenge trading. I lost 10,000 rupees yesterday. I want to recover that amount today from the market. I will do anything to recover that amount today from the market. और एक ट्रेड में मुझे 10,000 का लॉस हो गया, दूसरे ट्रेड में 10,000 रिकवर करूं, दैट इज कॉल्ड रिवेंज ट्रेडिंग. And when that revenge की जो भावना है that comes into your system, all the psychology, all the systems, all the position sizing that you have learned, it goes to I don't know where, and you start losing even more, and you will kill your capital. So ego and revenge trading is a capital killer. It's better you learn from my experience rather than experiencing it yourself and blowing up your account. Fourth thing is FOMO is out of question. FOMO, fear of missing out, is out of question in stock market. What do I mean by that? Simple meaning is there are some people I've seen who call themselves traders, and they stick in, like they just sit in front of the screen from 9 to 3:30. After 3:30, they are doing homework for tomorrow and maybe analyzing the trades, whatever they do, they just stick, and they only have their weekends open. They have their lunch after 3:30, maybe 4 and 5. I do my lunch at 12:30 in the morning, in the afternoon actually, when the markets are usually sideways. See, there are a lot of people who have this FOMO. And because of that FOMO, they take wrong trades, wrong decisions. But FOMO in stock market is out of question. Why? Why do you have a FOMO? There are plenty of opportunities. I have seen people, they are in a family wedding function, maybe their cousin or maybe their niece, they are getting married, and they are sitting in the hotel room and they are trading. The functions are going on, they are trading. Market is not going anywhere. In the lockdown, when everything was shut down, not even a single store was open. If you don't have a pharmacy or essential product store, everything was shut down, but market was not closed even for a single day. Why do you think there is a like limitation of opportunities? If you want to go on a vacation, go. If you want to have attend some weddings, go. If you want to spend time with your family, do that, because opportunities are numerous in the market. It's n number of opportunities. You're not going to miss out on any. So FOMO should be out of question. And last thing is bad trade and wrong trade. There's a major difference between bad trade and wrong trade. What do I mean by that? There is something called as bad trade. Bad trade means what? Everything was right. RS, price, pattern, volume, momentum, volatility, time, sentiment, trade, everything was right. Your risk reward was right. Your position sizing was right. Everything was right. You took the trade, but market was not accepting that. It went down. It took away your stop loss. You gave your money, happy loss. That's it. That was a bad trade. Wrong trade means it was not fitting in your system, but you took the trade. Let's take a chance. Let's see what happens. राइट, अरे यार मुझे लग रहा है इसलिए आई कैन डू दिस. और एक दो चीजें तो हो रही बट बाकी नहीं बैठ रही, बट यार लेट्स ट्राई दिस. एंड इफ दैट गोज रॉन्ग, दैट इज रॉन्ग. यू फॉलोड एवरीथिंग बट पोजीशन साइजिंग या थोड़ा बढ़ा के देखते, दैट इज रॉन्ग. Bad trades are going to be the part of your journey. It's going to be part of your career. That's okay. But wrong trades को हर situation में you have to avoid. And these things should be a part of your psychology. And how to maintain an intact psychology, intact emotion. Identify your personality traits. First thing, what do I mean by that? Identify a personality traits. Well, that means you have to understand what kind of person you are. What do I mean by that? See, if you are anxious person, very anxious, you can't stand with the idea that, okay, whatever you're doing, your money is on stake, right? You can't sleep when your money is on stake. Swing trading, positional trading is not for you. Intraday is for you, scalping is for you. But if you are a person who can't take quick decision, अरे ऑप्शन भी देखना है, फ्यूचर भी देखना है, इसमें क्या हो रहा है, इस ट्रेड में क्या हो रहा है, निफ्टी क्या हो रहा है, डाउ जोन्स का ओपन, इफ यू कांट, एंड स्टॉप लॉस क्या करूं, ट्रेल करूं या ये करूं, if you can't take that risky positions, or can't take decisions very quickly, then swing trading is for you, positional trading is for you, long term trading, swing trading, investment is for you. You have to identify whether you can spend the time like from morning to afternoon in front of the screen or not, or you are a working professional student or some. If you can spend some time, you can do options, you can do futures, you can do intraday trading. If you can't do that, swing trading is best for you. There are some people who are selling their course, spend 15 minutes a day and trade in options. Tell them you only trade. I don't want to trade. I can spend more than that, but I want my money secured. Don't fall for the such scheme. It's not that easy. It is not that easy. Understand that. Okay. Follow the process. Whatever process you have, whatever system you have, focus on that. Be adaptive. Adaptive means change with the market conditions. Okay. You know, okay, RSI 60-40 strategy works, but it works when the markets are trendy. It will not work when the market is sideways, because the market is sideways. It means RSI 60-40 is between 60-40. It will not give you breakout. It will give you false breakouts. That time you have to shift to maybe support resistance trading. Maybe you have to shift to 20 moving average weekly strategy. Correct? So be adaptive to the market. Take a break after a loss. That is very, very important. People don't understand this enough. Whenever start rewarding yourself. Now, this is something that you're going to, if you're a beginner and if you're a student, you're not going to value what I'm teaching you right now. But the moment you start trading professionally, this is going to help you a lot. Take a break after a loss. What I personally do is, if my daily loss target is achieved, like on a day I'm ready to, let's say, take 50,000 rupees of loss. So the moment I see 50,000 rupees of loss in my PNL, I exit all my positions. What I do is, if my daily target is achieved, I will do a small party at my office. Okay. Whoever, made a 50,000 rupees benchmark possible for us, whichever trader made this possible, he will treat us, or he or she will treat us. Or maybe if I'm done with my trading for a day, I will go out and have an ice cream. Ice cream. I like ice cream. That's how I reward myself. Maybe something sweet, because I have a sweet tooth. I might, get some sweets. I might get some ice cream, or maybe some other desserts, some cakes and pastries. I'll have that. That is my way to consolidate what I have done and to be ready for the next day. Let's say I have taken a bad trade, or there were some big positions in the market which made me lose, which triggered all the targets. There was a huge gap down opening because of some panic, and my weekly loss target is done. And it's Tuesday today. I will not trade for the upcoming 3-4 days. Of course, I'm not going to trade. And analysis should be done on the weekend. So I still have 4 days, 3 days in front of me. What will I do? I will go out maybe on a small trip. I know that's painful. When you've already lost money, it's painful, but make it happen. Maybe, and I'm not saying, you have to go on a trip to Goa or something. No, go somewhere nearby. Go on a drive. Okay. Go on a bike ride. If you have a cycle, go on a ride. If you can't do that, go on a park nearby with your family. Take some food with you. It's free. But take a break after a loss. If you have lost the entire month's capital, month's risk appetite, take a break. You don't have to trade. So don't sit in front of the screen. Don't try to analyze what to do in the market. No, if you sit in front of the screen, you will trade. Don't look at the market for the entire month. You will see what will happen. You have the skill. You can analyze the market in 2 hours. Why do you need to look at the market all the time? Take a break. That's as simple as that. Reward yourself for the achievement that you have unlocked, and you have booked the target of an entire month in a day or in a week. Go out. If you can, go out to some place nice. If you can't, go out anywhere, but just go out. Go out on a mountain, just climb a mountain. That's free, right? Go out to a temple nearby, which is some at a good height. You'll feel good. Go out to a restaurant. If you don't want to go out to a restaurant, fancy restaurant after a loss, maybe have some street food. Do whatever you want to do, whatever that makes you happy. Go out, watch a movie, go out and roam in a mall. Entry is free. Just roam around, have some food in the food court and come back. But take a break. That's very, very important. It will firstly stop you from taking revenge trading. It will clear all the clutter from the mind. It will make you feel a little bit happy after the loss. And most importantly, it will not let you trade. It will not, and of course, as I said, it will not take you revenge trading. It will not let you do the revenge trading. When you will come back with a good energy, positive energy, without any revenge in your heart, and you will trade successfully after that. Maintain trading journal. You have to maintain a trading journal. In a journal, you will write, I bought this stock. This is my buying price. This is my selling price. This is my reason of entry. That's something that you will write once you're entering the trade. Then you maintain the journal, maintain the trade. See what's happening. Analyze. Okay, see what's happening. Market went up. I wanted to sell this stock. If that is the feeling inside you, write this down. Then you trail your stop loss. I trailed the stop loss to this point. I trailed in the stop loss to this point. I book 50% of the quantity here. Then once you exit, write a review, emotion review. Booked too early. I was very anxious. I was very this. I was very that. I was very happy. I was overexcited. I booked the profit very early. I booked the loss very early. Write that down and keep on writing that. Keep on doing that until until for the next 21 pages, you are just writing, I followed the process. I followed the process. I followed the process. If you see 21 pages of I followed the process, you don't need the journal anymore because in 21 days, that has become a habit for you. But let's say you write, I followed the process for 10 days and you missed that one day and you were like, you overreacted or you overcalculated or you overthought about a trade, then you will start again, start over for next 21 days. Okay, but the moment you don't see 21 consecutive days, I followed the process in every trade that you have taken. Maintain a journal and then work out, eat clean and meditate. If your body and mind is not in a perfect state, you cannot trade successfully. Work out at least 2-3 times a week. Eat something clean. Don't eat junk food all the time. Okay, meditate. That's great. It doesn't matter who you follow. You follow Sadhguru, you follow Sri Ravi Shankar, you follow any other type of meditation, or you follow some other person. Just meditate. Just calm your mind. A calm mind can trade. Okay, mind is not calm, they cannot trade. Even if you have a small thing stuck inside your teeth, you cannot focus on anything, but your tongue will go all the time there. And then how can you manage to trade, which is already a very difficult task? How can you manage to do that while there's something wrong in your body or something wrong in your mind? You can't do that. So if you want to take right decisions, you will have to be physically and mentally healthy. And working out, eating clean, and meditation can help you a lot. Now you don't need to do all that stuff. Let's start with bonus strategy. I think you guys have been waiting for this since a long time. What is the bonus strategy? The bonus strategy for you guys is it's a positional strategy. Okay, positional strategy. Okay, positional means you're not trading for 1 week, 1 month. You're trading for 5 months, 6 months, maybe more than that. The strategy is very simple. This is RSI 60-40. Time frame will be 1 week. That means every candle will be showing you a chart of every candle will be showing data of 1 week. The moment RSI goes above 60, on a weekly chart, you will buy above the high of the candle, and the low of the candle will be your stop loss, initial stop loss. Okay, I'll show you with some examples. So let's take any stock. I'll just resume sharing. Okay, let's take any stock. Let's say TVS Motors. I will make it a weekly chart, 1 week chart. Now look at this. You don't want to trade when the RSI of weekly, this is a 1 week chart, is between 60-40. You will take a trade the moment RSI goes beyond 60. Now, I will remove everything else. I don't want volume as of now. I don't want moving average as of now. I don't want 200 EM as of now. Okay, fine. The moment weekly RSI goes above 60, which is going on this candle, actually, yes. Can you see RSI 63 over here? Can you see the value? So here it is 58 and the next is 63. On this candle, it is 63. What will I do? I will mark the high of this candle and this will be my stop loss. Okay, this is done. When the high is crossed by the next candle, I will buy and I will hold the stock. Now, my initial stop loss is 683. My buying price 730. That means it's a decent size, almost from here to here. It is 7% of stop loss. Now, it is 7% in terms of this stock price, but how much will I buy? As much as my quantity risk-based position size recommends me. Now, till what price I will hold this stock? Till when I will hold this stock? Till the point RSI goes below 60, which is my reason stop loss, or by using a trend follower. What is a trend follower? It's a new indicator called super trend. Okay, super trend. Usually people use this to identify the trend or identify the like what kind of trend is going on in the market or to support their trade. I use it as a stop loss. Now, if you see, it is very far away from the price, right? It is very far away from the price. To make it more near to the price, what will I do is I'll click on settings of super trend. Okay. The length is 10. I will make the length 14. Okay. And factor is 3. I will make the factor 2. So instead of 10 and 3, I will make it 14 to super trend. It has come near the price. Okay. So the moment it starts going up, I will hold it. I will hold it. And my super trend will be my stop loss. The moment the super trends turns red, I will exit my position. Or the RSI goes below 60, I will exit my position. So where did the RSI go below 60? At this level. At the same time, the super trend also turned red. So I bought this stock. I bought this stock at this point. I sold this stock at this point from 600 and 732 to 1013. That is 38% of almost 40% of the profit in 190, almost 200 days, almost half a year, more than half a year. Half year, 38 or 40% profit. That is a huge amount of profit without doing anything. Without doing anything, if you are able to make such profit, what more do you want? Another trade that we got, look at this over here. Above 60, the market went. Look at that. I'm going to show you everything, whether the profit or loss. Above 60, the market went over there, over here. Okay, on this candle. Here it was 59, here it went above 60. So you bought at this level. Your stop loss was this. Okay, the buying was activated, it gave you the stop loss, so the stop loss is triggered. Whatever you wanted to lose, according to you, according to your position size, it is done. Loss ले लिया, कोई दिक्कत नहीं. The loss was so small. Now after that, it gave you an entry again, where at this green candle, the market went above 60, right? You buy above this green candle, and your stop loss is the low of this green candle, initial stop loss. The moment the candle starts going in the desired direction, you hold it, you keep on trailing it along with your super trend and along with the RSI, right? Goes up, 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 up. And here it goes below super trend, not below RSI 60, but it goes below super trend. So that's where you exit this position. So you bought at 1046 and you sold at what this price is 2060 whatever. The amount of profit you gain is 79 or 80%, and the days was 322, not even 365 days, not even 365 days. Less than a year, you made 80% returns. That is humongous returns. And you can use the same super trend for some other type of, like for other type of trading as well. This can be your trend following stop loss. Isn't that a great strategy? Without doing anything, your investment is getting you 80% return. What more do you want? You will get losses, you will get profits, but you will get bigger profits, small stops. That's all you want. And on that note, I would like to end today's session, everyone. That was a great experience being a part of your financial journey. I will see you in the live session. But before that, make sure you watch all the recording one more time. Practice whatever we have done so far. Practice this in the market. Watch the weekly market analysis, last weekly market analysis which is uploaded. See how the stocks are performing, how they are not performing, why they are not performing, and why they are performing. Look at that, and I will see you in the next live session. Till then, keep learning and keep trading. All the very, very best.